Good day, everybody. Welcome to our webinar for the month of August 2019. It's been a very busy month. A lot of things have happened. There's been a lot of excitement and drama out there, both locally and internationally. I'd like to start off by talking about Wall Street a little bit. Trump has reignited the trade war with China, and China, of course, has retaliated as we expected, and this has had a dramatic impact on the S&P 500. So let's start off there. Let's take a look at that chart, and here you can see the effect of Trump's reignited trade war, which has taken the market down about 6%. This is a mother and baby formation in candlestick charting, which is usually quite bullish. So where you get a large candle and then inside it the next day a smaller candle, and especially if it's a green candle rather than a red candle, that tends to be a bullish sign. So our view is that this will be a fairly short-term downward trend or correction. Maybe similar, although not in size, but another V bottom. Let's go to a 2-year chart. You can see this is the V bottom which occurred in December last year and was completely stimulated or caused by Donald Trump, and we said at the time this will be a V bottom. We're saying the same thing again. We're saying this is a V bottom, similar also to this one which occurred in June, and I expect the market to recover very quickly from this point here. So right now the next support level is this level down here, which is 27.44, but at the bottom here it went down to 28.44, so it's still 100 points above that support level, and we've already had a 1.3% jump last night on the market. Of course, we should look at the American economy, because if you want to know whether we're looking at the start of a bear trend or simply a correction, then the best place to start is by looking at the American economy, because ultimately the stock market must reflect the economy sooner or later. And the economy is doing very well, still doing very well. In the second quarter, so far, the second quarter of 2019, 380 S&P 500 companies have reported. 74% of them are above expectations. Their profits are above expectations, which means that the economic boom in America is continuing. The earnings of the S&P 500 companies are up 2.7% above last year, and if you leave out the energy stocks, they would be up 3.4%. What is interesting is the Brent crude oil price, because that has been falling, and that is usually quite positive for markets generally. You can see how Brent crude has fallen right back to below $60 a barrel from this high point here at 74, and that obviously is beneficial to markets throughout the world because it reduces inflation, and it makes economies boom, because everything in an economy is ultimately moved in an internal combustion engine at some point or another. All products are. So investors are unnerved by Trump's tweets, and some of them are pulling out of Wall Street, and the result of that is a sell-off on the S&P 500. However, technically, if you look at this thing over 2 years, you can see that there's a rising trend line here, and that we made a new record high just a few days ago, or about a week ago, and that record high took us up to this trend line, and we expect that that upward trend line will continue, and that this will be a short-term downward trend and therefore a buying opportunity. That is what we are suggesting to you. Alright, that's what's happening in America. Now I think it's important, as far as South Africa is concerned, to look at some of the internal political issues which are going on in this country, because they are directly impacting on the stock market. And obviously the key to all of this is President Ramaphosa. the economy is now completely dependent on Ramaphosa remaining in office. He is the only bastion, really, standing between South Africa and rampant populism and corruption. Without him, South Africa will undoubtedly be downgraded, and the rand would, as a result of that, fall quite substantially. What we are witnessing at the moment, I believe, is the strongest attack on Ramaphosa so far. How serious it is difficult to measure from the press reports and so forth. But as usual, you can turn to the markets, and they will tell you what is really going on. And especially the most important of those markets is the R186, which is sorry, let me pick it up here, I think. There it is. The R186 is our long bond, the 10-year bond, and the interest rate on that bond is obviously very important, the yield on that bond. And here you can see that yield, and you can see that it's been declining steadily since October last year, and through the election period and down to this point here where it is. It reached below 8%, and then this latest round of attacks on Ramaphosa have taken it back up to the upper trend line at about 8.3%, 8.4%. Now the yield on the long bond is the interest, the effective rate that investors are paying to buy South African long-dated treasury bills. And that rate incorporates the risk which overseas investors see in the South African economy, and that obviously includes political risk. So if they think Ramaphosa is going to be deposed, removed as president for whatever reason, they will become scared, and they will want a higher yield to encourage them to buy our bonds rather than somebody else's. What has been happening since Ramaphosa, well, since basically October 2018, is that the yield has been falling, showing that overseas investors have been becoming more and more confident of his ability to reform the economy and to get everything running properly and to move away from populist ideas. In the last couple of weeks, as you can see here, from about the middle of June up until the present, the yield has moved back up to that top trend line, and this reflects the fact that there are unprecedented attacks on Ramaphosa at the moment and people close to him like Pravin Gordhan. But this does not look like a collapse, not to me. In other words, overseas investors, and remember these are people who have billions and billions of US dollars riding on their decisions, and they are very well informed. Their position is that South Africa is still basically on track, and that this latest attack on Ramaphosa does not constitute a collapse, at least not yet. It's interesting that less than a year ago, if I just put a bit more data on the screen here, you can see that the yield here was nearly 10%, 9.8%, less than a year ago. And it has already come down to under 8%, and now with this latest issue it's moved from 8% to about 8.4%. So I don't count that as a major reversal. I think that that is quite a reasonable position given the level of attacks. Alright, let's take a look at the economy. The economy is battling, of course, it would be. The attack on Ramaphosa is scaring away badly needed foreign direct investment, which this country really has to have. The Reserve Bank has reduced its growth forecast for this year to 0.6%. So they're only expecting growth of 0.6% over the whole year. But if you think about the fact that in the first quarter we had negative growth, we actually shrank by 3.2%, then for them to be expecting 0.6 over the whole year means that they're expecting the rest of the year to be pretty good. The Monetary Policy Committee has reduced rates by 0.25%, and I expect that there will be at least one and probably two more 0.25% cuts before the end of this year. Eskom, of course, has come out with the news that they lost 20.7 billion rand in the year, and obviously this shows us the true cost of state capture. However, the attacks on the Reserve Bank have receded. With the appointment of Kanyago as the governor of the Reserve Bank and 2 deputies from within that organization, the attacks have shifted away from the Reserve Bank and towards Ramaphosa himself. There's no more talk really of nationalizing the reserve banks, and there's no more wild talk about quantitative easing and so forth. Kanyago has talked of reducing the target range for interest rates to between 3 and 4%, rather than the current target range, which is between 3 and 6%. So he is tightening up on inflation in this country, and that has got to be a very good thing. And if you think about the victories for the anti-populist movement in this country, which is represented by Ramaphosa, there are really 2. One is the Reserve Bank, and the other, of course, is the judiciary. State capture was never really able to get its hands on either of these organizations, and today they are the things which are holding South Africa together. The recent appointment as head of SARS, the Revenue Service, is Kieswetter, and he says that tax collection in this year, 2019-20, could well be below budget, and that's not surprising given the state of the economy. Obviously, if the economy is not growing, then tax revenues will be lower. So we're going to get lower profits, and of course higher unemployment also means less individual tax as well. Unemployment has reached a new record high of 29%. In the second quarter of this year, following the disastrous first quarter, they estimate that 450,000 jobs were lost. A lot of that is due to the load shedding from Eskom in the first quarter, and hopefully that wasn't repeated in the second quarter, so the employment figures might get better from there. Another problem with unemployment has been the tourism visa rules. The visa rules have prevented people from coming into the country as easily as they could. On the good news side, I see that Tito Mboweni, our Minister of Finance, is cutting the size of the civil service and aims to save 37 billion rand over the next 3 years. That will obviously help enormously. We have to bring the size of the civil service down in this country. We really can't afford to have such a big civil service. And that, of course, by that I incorporate the state-owned enterprises as well. But it will cost about 16 billion rand in early retirement packages and retrenchment packages and so on to do that reduction in the size of the civil service. And they're trying to do it as carefully as they can so that they don't upset unorganized labor. They obviously don't want the unions to get too upset about it. But I think that sooner or later there must be a conflict with the unions in this country. Vehicle sales in July were down by 1.6%. That's the local sales. But exports were up 22%. South Africa is becoming a vehicle export powerhouse, and it is helping a great deal with foreign direct investment, because these overseas vehicle companies are investing sizable chunks of capital here. It's helping with our unemployment problem, and it creates a lot of foreign currency. So that is generally a very good thing. All of these things in the economy are reflected, of course, in the rand. So let's just take a quick look at that. The rand is also very much subject to overseas perceptions. So similar to the yield on the long bond on the R168, the rand reflects this as well. And here you can see the pattern of the rand. You can see up to the election, this weakening trend, and then after the election and the state of the nation, we had a stronger trend, and then this is now the battle to unseat Ramaphosa taking place here and impacting on the rand, taking it back to nearly 15 rand to the US dollar. So of course overseas investors see this attack on Ramaphosa as negative, and some of them will withdraw their funds, which causes the rand to fall. But it's quite clear to me that whatever your political persuasion is, Ramaphosa is critical to the survival of the South African economy. The rand has fallen about 7.5% in 2 weeks, and the R186 has dropped to 8.43% yield. On top of Eskom's problems, we have lower tax collections. Rand Merchant Bank's John Cairn said that there's a 47% probability of the rand falling by about 30% against the US dollar. And he said that that is due to the tightening cycle in the US. However, subsequent to that, the governor of the Reserve Bank in America has said that this is not a new tightening cycle in US interest rates, but rather just a mid-cycle adjustment. So the rand is being buffeted by many outside factors. Obviously US interest rates, and also what is happening in other emerging countries. The 15.46, the 15 Rand 46 level that occurred in September 2018. There it is there, you can see it there. September 2018. That is the low point, and obviously there will be major support at that level. In our view, which is not cast in concrete, Ramaphosa will prevail in this battle. We believe that he will prevail, and that this therefore represents something of a buying opportunity. Okay, let us now turn our attention to the commodities market. And what I particularly want to talk about here is the platinum situation. The platinum industry is in the middle of negotiating with organized labor to come up with a deal for the next 3 years. The union which they are negotiating with is AMCU, the Association of Mining and Construction Union, which is very militant and which had that very effective strike in 2014 where they stopped all action in the platinum industry for 5 months. They paralyzed the industry. But the situation is now very, very much different from what it was in 2014. First of all, AMCU has suffered a humiliating defeat at the hands of Sibanye Gold and Neil Froneman. Secondly, platinum group metals are much stronger than they were in 2014. And thirdly, of course, we have a new president who is not particularly in favor of populist movements. So whereas AMCU had the support of the ANC back in 2014, I don't think they would get that support today. So the mining industry is at the sort of cutting edge of collective bargaining. And that is where this country has got to come to some sort of agreement or arrangement. The union movement in this country is far too strong and needs to be curtailed. At some point, Ramaphosa is going to have to face off with the union movement, either because he's going to cut Eskom's labor force. Eskom itself, the management of Eskom itself, says that the labor force in Eskom is about 1/3 too big. In other words, they should be cutting 1/3 of their staff. The union movement has said that if they try and do that, there will be a strike, and I have no doubt that they will strike. The question is, who's going to survive that? And will Ramaphosa take on the unions in Eskom? I think that is a virtual inevitability, that has got to come to a head, because the losses being taken by Eskom are unsustainable. All right, let's look at a few companies and areas of the market. I'd like to just start off by talking about, since we're talking about commodities, talk about Master Drilling's new machine, their tunnel boring machine. This machine is being tested at Northam, which is a platinum mine. They're doing a 3-month test there, and they're boring a 5.5 meter diameter tunnel, and they can do this 3 times faster than the old blast and clear method, which they can actually do 150 meters of tunnel per month, which is a huge improvement and saves a lot of costs. This machine could revolutionize mining worldwide, but especially here in South Africa. It significantly reduces the cost of deep level underground mining. Most of South Africa's platinum group metals and gold are at very deep levels and require this type of machine. Okay, let's look at healthcare. I want to just go to the healthcare index. I think I've got it here. Yes, there it is. Right, the healthcare index is interesting to me because healthcare traditionally is a defensive sector. People normally will pay for healthcare even when the economy is tight because they have to. If your doctor tells you you need a triple bypass, then you can't really argue that you don't have the money because otherwise you don't have your life. So a situation like that, people will pay. So healthcare has always been defensive. And that was always the case until about March 2015. And after that, the economy became so tight and consumers under such pressure that a lot of them have cancelled their medical aids. Some of them are using day clinics, which are cheaper and quicker. And obviously, there's been a sell-off of these medical shares, healthcare shares. There are basically three shares in this index: Mediclinic, Netcare, and Life Healthcare. And as you can see, the index is down 66% over the last few years, last 4 years basically. Of course, there's also the uncertainty which surrounds the National Health Initiative, which I think nobody really knows how that's going to impact on their medical aid scheme. Medical aid schemes themselves do not know what the effect of that is going to be. What is interesting, though, is that this healthcare index, the JSE Healthcare Index, which is J540, is sitting on a price-earnings ratio of 10 with a dividend yield of 4%. It's looking very cheap to us. So it's something that you might consider looking at the healthcare industry. There's a new listing coming onto the stock market, either late this year or early next year, which could be worth your attention. It's a company called Bushveld. It's currently listed on the alternative investment market in London, and it has got a market capitalization there of about 5 billion rand. This company mines vanadium. Vanadium is a key component of steel. If you add 3% of vanadium to steel, you double its strength. So it's a very important metal. And Bushveld operates a mine near Brits called Vanetco, and they are busy buying another mine near Witbank, or Emalachleni as it's called now, and that is called Vanchem. The aim is to produce about 10,000 tons of vanadium per annum, and they already have negotiated a 3-year settlement with AMCU, the union, so they're not going to have any union problems. We think that this listing, when it comes on either late this year or early next year, will be a very good one. So it's something to just watch out for. The next share that I want to look at is Woolies. Woolies has gone through a torrid time. Just want to condense this chart here a little bit. There you can see the long-term situation with Woolies. And what we've got here is a long-term downward trend line and an upside breakout here. The problem with Woolies was always one of the very best retail shares on the JSE until the CEO, Ian Moyer, decided to buy a company in Australia called David Jones for about 2.1 billion rand. That was a very bad decision taken by Moyer and his board. And they've had to write off about half of the value of that $2.1 billion. But now suddenly things are beginning to pick up at Woolworths. David Jones is looking a little bit better. Sales for the year to 30th of June picked up quite a bit. Over the whole group, they were 5.1% or 3.9% in constant currencies. Obviously, the fashion, beauty and home sales in South Africa are critical. They were up by 5.5% in that year, and food in the second half of the year was up 9%. David Jones online sales jumped 46.8%, and they now make up 7.7% of David Jones's total sales. Country Road, which is the other subsidiary of Woolworths in Australia, saw online sales up 12.9%, and they now make up 10.3% of their total sales. The market liked these results, and as you can see, the share has broken up through this trend line and is consolidating at higher levels. We think this share is still cheap at current levels, and it's someone you should definitely look at. Okay, let's consider Altron. Altron is a company that was originally started by Bill Fenter in 1965. It's refocused on its core business. It operates in 6 African countries and also in the UK and Australia. In the year to the 28th of February 2019, turnover was up 7% and headline earnings per share up a whopping 50%. They've won some very good contracts. They've got a contract to do the Gauteng broadband network. They're also doing a vehicle tracking contract in eThekwini, which is what used to be called Durban. And they have a 5-year contract in the UK for Windows 10 at the NHS there. Technically, they've got a very strong upward move, as you can see here. The share came down, went through this island formation, and has now been moving up very, very strongly. Okay, let's look at ShopRite. ShopRite is South Africa's largest retailer, and they've got extensive interests in the rest of Africa. As you can see, the share made a peak here in March 2018 and has been declining ever since. This is also shortly after their CEO resigned, so their long-term CEO resigned, and they've had new CEOs in place. But they've also battled with their African portfolio. And this is because of low consumer spending and problems in Africa. Angola, for example, where they've got 60 stores, has been experiencing hyperinflation, and that has dragged profits down. But in the current period, their turnover in South Africa has jumped by 7.4%, and it looks like they're now in a recovery phase. The share is still on a price-earnings ratio of 19, and we think that it looks quite cheap at these levels. Technically, it might be close to the bottom of this downward trend. So again, this is a share which you should possibly look at. Okay, now Anglo Gold is South Africa's, well, Anglo American's gold producing company. It's a huge international gold producer, and it's been making enormous progress towards improved profitability. First of all, they had the CEO there, Mr. Venkat Krishnan, and he gave way to the new CEO, a chap called Dushnisky, and that gentleman immediately, as soon as he became CEO, he bought 5.8 million rands worth of shares in Anglo Gold, which shows his confidence. He is also cutting costs and taking out the deep level mining here in South Africa. The decision has now been taken to sell the Imponeng gold mine, which is the deepest gold, well, it's the deepest mine in the world. They're mining there at 4,000 meters down, over 4,000 meters down. At the same time, the gold price has ticked up. I'll just show that to you. It's gone up quite nicely, and that I think is helping quite a lot. If we just see here, you can see here the upside breakout in gold, and that's obviously helping a company like Anglo Gold. At the moment it's sitting at $1,406, and at that level Anglo Gold is very profitable. They now have 14 operational mines, and in the 6 months to the end of June they expect to be highly profitable with a production of 1.55 million ounces of gold. Well, I'd like to just finish off this talk by mentioning an article which was carried in the Business Day, where they reported on Goldman Sachs research into fund managers in America. That research, obviously fund managers in this country manage pension funds, unit trusts, and insurance companies. All these organizations accumulate large bodies of capital which they invest on the JSE, and those bodies of capital are then managed by fund managers. So Goldman Sachs research, they said the following. They said competing managers, no matter how much they purported to have unique strategies, all tend to pile into the same bundle of high-performing stocks. And they found that 68% of fund managers in America substantially bought the same 10 shares. So they move like a herd of sheep. When one crosses the bridge, they all cross the bridge. Because in the fund management business, the worst thing for a fund manager is to be left on this side of the bridge when everybody else is on that side of the bridge. In other words, if everyone else is buying retail shares, then you don't want to be the one fund manager who's not buying retail shares, because that's how you can lose your job. If you don't think it's the right time to buy retail shares, you should still buy them, because there's safety in numbers. Nobody can blame you for doing what other fund managers are clearly doing. So that way you keep your job even though you don't really believe in what you're doing. And this causes a lot of problems in investment. The basic thing is you shouldn't give your funds over to institutional investment fund managers. So we recommend that you avoid insurance companies, their endowment policies, the investment side of insurance. You avoid pension funds if you can, and you avoid unit trusts. Because these are other people managing your money, and nobody cares about your money except you. So you need to care about your money, and that means you need to educate yourself in the art of share selection and transaction timing. Ladies and gentlemen, that's what I have for you today. And obviously the notes will be up on the website, and you need to read through them. There's an awful lot more in the notes than I've been able to cover here. Otherwise, I will talk to you again on the first Wednesday of next month. Thank you for listening.